combination of tools. It's really built to make cybersecurity easier. Welcome back to another episode of the MSP Cyber Roundtable. We have guests with us returning today. Freddy Knight, Cyber Profin consultant. I love learning new acronyms, Profin. And we have Brad Fraser from Infoprotect UK, our premier UK partner. So, guys, how's your summer going? We're sort of like on the tail end here, and we're both in these northern latitudes, and I guess we have actually, Brad, where are you located right now?
I'm in the southern hemisphere for another couple of weeks, Matt. Then I'm back to the heat.
Oh, okay. So we, but like I feel like I'm in Game of Thrones. Like winter is coming. I can just like see it on the horizon. Even though like this week it was like very very hot. I'm just like, oh okay. I woke up this morning. I was cold. I had the windows open. I was like, oh man, I gotta close them. Anyway, so if you guys, what's the summer action looked like for you, Freddie? If you had any adventures?
No, not so much. I've got an 8-month-old daughter at home, so this has been like my first summer.
That's an adventure.
Looking after another human, yeah. So this is adventure would be a very loose term to call it, but it's been a wild ride.
Yeah, that really is an adventure. Okay. Remind everyone, give people a little bit of background here. We did a storytelling last time that was a little deeper, but you've been in the cyber risk space for a while.
I have, yeah. So I started off as a general insurance broker 15, 16 years ago or so, and worked my way through one way or another into the cyber insurance space around 10 years ago or so. I was head of cyber for an insurance brokerage called Stackhouse Poland. When that business was sold, I co-founded a cyber insurance MGA focused on cyber risks for small businesses in the UK called Optimum Specialty Risks. And more recently, I've been acting as an independent cyber technology and profin consultant to the insurance market. So helping insurance brokers, MGAs, and emerging insurtech businesses enter and successfully capture the UK insurance market. All
right. And Brad, remind everyone how you, your background and your current mission with Infoprotect UK.
Yeah, so background for this particular business, IT service provider, that then wanted to look into specialities. And that speciality was in the insurance space. Cyber insurance really interested me. And what I saw was a gap that certain expertise was required in a concierge service almost to give the clients a better approach to getting cyber insurance. Instead of just slapping a proposal form in front of them and saying, fill it in and we'll give you some insurance, we take them through the entire process and ensure that their cyber resilience, their cyber maturity is up to speed, so that when they do apply for insurance, they're getting the best deal possible, the best wording, the best terms, the best cover at a good premium. But at the same time, we're making sure that they're cyber resilient through our governance, risk, and compliance process.
Yeah, and it's critical, really. I want to point out that in that application period, that when you're applying for insurance, you're applying first of all for the right product, right? You're qualified for the right product, but also, you're making declarations there on your application, and it's good to make sure that they're grounded in something really defensible. So it's really important to get that assessment in as you're shopping. Now, today we're, the banner of the day, cyber risk in the retail space. So just as a to paint a picture there, when we talk about retail, what I think of is I think of the hospitality sector. I think of Main Street retail. I think of e-com. I think of these places where businesses interact with consumers in basically a real time way, right? Is that basically the box around the retail space? Are there um, other other things that you want to stick in that box for today?
Yeah, I think the motor trade, the retail motor trade, is a big one for us. We've got a large customer in that space, and typically there has been some attacks in the UK before, and because you're tackling, it's whether you're a fast food outlet or a high street shop, or you're an e-commerce or a large retailer, say like an M&S here or something like that, or a co-op. You're facing the same risks. You've got your point of sales, you've got your Wi-Fi, you've got your data transfer, your data accumulation, and everything around that. So there's so many touch points in retail. In fact, many times those touch points are a lot more than other businesses. And you, as I said, you're handling a large amount of customer data.
Yeah, I mean, the motor trade's interesting, right? Because in the durable goods sector, we used to have a number of retail like store types, really, like places that the consumers went to shop for things, right? And as the largest durable good that consumers interact with, other than a house, right? The motor trade has survived, right? Because cars are, frankly, they're large,
Yeah.
right? They don't fit in a Walmart, right?
Well,
So
they're not going to make of an Amazon truck either. So
yeah, they're not. They're not. People like to try them out. They like to like stick their heads in them and press the buttons. And so and in that space, right? You've got I mean, not only do you have the 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 franchisee of the manufacturer that has to operate their storefront with their salespeople, with their business office, right? You're actually in a high risk environment. There's, I mean, you're touching people's finances in a really impactful way. These are large transactions. You're interacting with their bank. They're large check sizes, right? There's a lot of dollars floating around. Not only is there a lot of money flowing through the dealer, right? But there's also people's personal resources being connected into that, right? So it's not just the price of a car, right? It's someone's entire resources, right? When you
actually, Matt, that leads on to like a really interesting point that, and maybe it's like a bit of an insight from the broking market that I can share here. But so as you talk about the money flow through a motor retailer, right? So most insurers at the moment are rating their cyber insurance products on turnover. So they will take consideration into security, but to give them like a base rate, they'll rate it on turnover. Well, if you take a high-end motor vehicle retailer, for instance, their turnover could be considered one of two ways, right? If they're taking $100,000 or £100,000 per vehicle, but they only make 5,000 or 10,000 per deal, right? How do you rate their turnover? Is it the 10,000 that they actually consider revenue, or is it the 100,000 that goes through their books and is paid to the manufacturer or the wholesaler they buy that off? So what we have found over the years, and I've done this with 2 or 3 cyber insurers, is that actually there are, and this is where having a broker in the middle does kind of help, but you can have like a motor trade product that really is looking at, say, $1 billion revenue a year. But when you break that down, they're only making 100 million revenue themselves. And the rating difference between $1 billion turnover and $100 million turnover is massive.
Yeah, I think that all of the essentially what we're talking about is a business where the gross margins, if you include the total ticket price of the item, right,
Correct.
are small, right?
Yeah.
There's other industries where this is the case.
Actually, another one very similar was like a travel exchange, money exchange. So
Oh
those
yeah,
guys,
that one's really extreme, right?
yeah, that was a huge one for me. I had, again, 2 or 3 instances over the years of trying to place their cyber risk where, on paper, their revenue or the money that goes in and out of the business, their turnover, if you will, was like $2-3 billion a year, but their actual revenue was close to like 20 or 30 million.
Yeah, and
Huge disparity.
here, here in the US, we actually had a major incident. I won't name names, but it was just in the past several weeks with a major grocer distributor,
Mhm.
and they had to shut down operations. And so the grocery trade, right, is another one of those, and that's on the extreme end some of these are massive businesses, right?
Yeah.
But the gross margins there in grocery, it is razor thin, right? And when they
Yeah.
have to shut down distribution, right? I mean that impact. They're probably feeling that for if they're down for days, they're feeling that all year. I would
Yeah.
think.
Well, and as well, there's a more direct threat in the motor trade space, especially, right? If they're transferring funds for the sale of a vehicle, and we'll use a nice round number of $100,000, right? If they're only making $10,000 from that transaction as either commission or the bit that they skim, however it may be. Well, if that transaction of $100,000 is intercepted with an invoice hijacking scam or funds transfer fraud, something along those lines, it's not one deal's worth of income to them. That's 10 deals worth of income. So if they've lost $100,000, they need to sell 10 cars to make that back. So the direct financial threat from these cyber attacks on retailers, especially when it's big ticket, low margin kind of stuff, is quite prevalent.
Yeah, and if I was an attacker, not that I want to reveal any, I don't want to give them ideas, but I know that this is already part of the attack plan, right?
Correct.
I'd be looking at 3-day week holiday weekends
Yep.
where there's a lot of shopping, right?
Yep.
And where you're closing the transactions on the following like Tuesday or Monday or whatever it is, right?
Black Friday, perfect example.
Yeah, you end up with, in some cases, depending on the way the calendar works, right? You could have the equivalent of months worth of sales packed into like a closing week, right? Where it's all in like a 48-hour window, right? And attackers are totally aware of this stuff. I mean, they unfortunately, we are as an economy, we are up against multi-billion dollar cybercrime empires, right? And they are not dumb about how they go about attacks, right?
Do you know what as well? That like the extended shopping weekends and stuff like that. So Black
Yeah.
Friday, there's a few of those kind of things, right? They almost create the perfect environment for fraud and scams, because what you're looking for, like what the attackers are basically, how you can spot a scam when it comes your way, right? Is, am I being asked to do something? So am I being asked to take action? Am I being asked to do it quickly? And am I being told there's going to be penalties if I don't take these actions? They're normally three like telltale signs you're dealing with a scam. But naturally, these extended shopping weekends, they almost like create that environment naturally, because you've got 24 hours to catch your discount. You've got, this will not be available after Monday. You have to act now, transfer your funds straight away, which is like, for an attacker, it's the perfect environment for them to be within.
So I wanna spend a moment to make it a little more tactile about how this actually plays out. Maybe we pick on the motor trade a little bit more, but we should also talk about some other situations in the retail space. Um, and then Brad, since you tend to be closer to the hands-on here at the street level, I'd love to get like any war stories you could share that aren't too specific, right? Um, the so in the motor trade space, and I'm thinking, I'm here in the U.S. And I understand that the shape of the business is pretty much the same worldwide. But in the U.S., one of the things that happened, and this is as a result of the fact that the motor trade space is now playing catch up, rapidly playing catch up here in the cyber risk space through necessity. But they were lagging behind And here in the U.S., one of the ways that we went about trying to push them forward towards catch up is some enforcement from the FTC. So there's a law here in the U.S., GLBA. It's been around for decades. But what the what the FTC did in the last few years was they put together these guidelines that were pretty specific about cyber, and it's forced the manufacturers are really getting the direct regulation and the distribution chain, but that's getting pushed down to the street level in the dealerships, right? And by both the manufacturers and the insurers. But these environments are places where basically all the rules of cyber are broken, right? So you have an open floor plan in a lot of these dealerships, right? There's sales point of sale systems, right? And I know there's a business office in the back, but you basically have these salespeople that have access to a lot of data, a lot of systems, they have access to everything in some cases. They're right in the middle of the sales floor, and no one wants to slow down the sale. So in some cases, you have these machines that are always turned on, always logged in. People are sharing them. They're not even locked, right? Anyone could just walk up to them, because the thinking in some of these front office retail environments is, well, we never want to slow down the sale, right? Never want to add resistance. We want to remove resistance from this big ticket item, right? So we want to make sure any salesperson can sit down at any desk and do anything at any time, and let's not worry about passwords. Is what I have seen out in the field, right? And I know that there's some change happening in the space right now, and I'm broadly laying out that space. But Brad, I'm curious, what have you seen in terms of an evolution over the last few years? Let's just get down to like at the tactile level. What are some of these actual problems that people are confronted with? They're actually having to uproot some infrastructure in the way they operate IT systems right now, right? To even be insurable, right?
Yeah, so Matt, exactly that. I mean, you mentioned the card machines in the center of the floor, and you've got all these fancy cars or whatever it is around, and the salespeople running around. And one of the things that happen is someone will call into a sales operator or just a person taking the details, and give them their card information so they can input it into the system. Straight away, that's fraught with danger. Yes, there's policies and processes and so on, but now you've got someone's credit card detail on the floor being written, either typed straight into a screen, which is typically the way it's done, and then once it's through, got the whole PCR DSS system. The banks are very good about it over here, where everything is controlled, encrypted, and it's always kept up to speed on that kind of situation. But straight away, it adds that complexity and that area where business email compromise can come in, training comes in, and so you can put whatever policies out there you want, plans, procedures. You've always got your weak link of your human that's playing with that stuff. And then you've got the social engineering. Once again, as Freddie said, it's like, you need to do this now. And it may not be a sales process, but it's around, you need to change something quickly. Mm-hmm. And it could be a SIM swap. And through that SIM swap, you're going to lose your cell number that you've had for 10 years if you don't do this very quickly.
Now you use some technical terminology there, SIM swap. So, and we just had our friend Fanny, who's a U.S. cellular carrier here. They're an MVNO, and they focus on stopping SIM swapping. They're only in the U.S., but basically the problem that we're talking about is that a lot of people's bank accounts, other types of accounts, are secured through text messages to their mobile phone. You go to log in, you get this text message. That's problematic for a number of reasons. It's better than just a password, but people get sent these messages, and people over the phone are saying, "Tell me the code," and it's confusing sometimes. And even if you think through this,
the one-time PIN is coming through to your cell phone.
Yeah. So not even if everything goes right, right? On the cell phone side, right? It's a little bit confusing here in terms of someone's asking you for a code, this, that, like, and you're in the middle of a transaction, you see the shiny car, and there's opportunities there for diverting those codes that then unlock full access to your bank account. But in addition to that, to make things worse, it's pretty easy to steal someone's cell phone number, unfortunately. And there's not a lot we as consumers can do to stop it. So, there's part of that's consumer risk, right? That's something that between the consumer and their bank, right? But if it's in the middle of a transaction, right, with a business, right, the business can get caught up in that risk as well.
Well, Matt, do you know, like I'm a huge advocate for the principle that incentives drive outcomes, right? Whether it's in business, whether it's in life, that if you want to achieve a certain outcome, you have to incentivize the stakeholders in the right way to achieve that outcome. Unfortunately, the retail sector, top to bottom, whether it's hospitality, motor trades, e-trading, whatever it may be, the incentives within that business are all focused on closing the deal, getting them to buy that product, whether it's a vehicle, whether it's an online. Like, for instance, when you put stuff in your basket online and then you choose not to buy it.
Yeah, you get
and
the
you leave
email
the
reminders.
website 48 hours later, you get an email. We noticed there was something in. So, like, every incentive in the sector is driven towards a sale, and quite rightly as well. It's a sales sector, right? There's no hard feelings for that. But the outcomes they drive are not always the sale gets over the line. Actually, that incentivizes some nefarious actors to get involved in that chain one way or another, right? If everybody in that workflow is focused solely on getting that business over the line, can I hit my targets this month? Are we on budget? Everything that comes with the retail space, it fosters a really like cyber attack friendly. Right, I've trademarked that term, but a cyber attack friendly environment where naturally the outcome isn't just that the sale gets over the line, but the outcome quite often is that you're leaving gaps in your security and your own defenses, which lets these guys in.
Yeah, so I review we've got security systems on our email, and I review some of the flow through that that gets that's tagged as suspicious. It's just one of the things I do. I'm CEO, but I'm also like the chief security brain.
The IT guy.
I luckily I'm no longer the IT guy. I'm very happy to no longer be the IT guy, but I'm still like the chief risk overseer. I was reviewing this morning, or maybe it was last night, and we got like a sort of a wave of spearfish attempts. They were very specific and tuned just for us, right? And one of them was this. It was like there was an item left in your cart email, right? There was these types of messages where if I was a salesperson, right, looking at this, I would think, oh, I've got this hanging transaction out there. For me to close this deal, I need to complete this workflow, right? And they're getting super specific these days. So these were tailored for us. I can just imagine in the dealership, right, a salesperson, right, and they've got this 40,000, 80,000, 100-pound sale on the line, right, or more, right, or more, and they're like, oh, I just have to click here, and the deal's done, right, and like, and they go through the screens and they're like, oh, great, I've closed the deal, right, and little do they know, right? Any number of things.
There's a cool follow-up there, from like with exactly what you're saying there, and this played a part in 2 losses I've seen over the years, specifically in the motor trade. Now these were both high-end motor trades, so like luxury vehicles. But talking about how specific they get with the spear phishing, and talking about how well these guys understand the environment they're operating in. So Matt, you hit the nail on the head. Like this is a $1 billion industry, right? These guys are paid very well. They have untold amounts of resources, and now with AI supporting their efforts, a lot of the hurdles that were facing them, they're able to overcome quite quickly. But specifically in the luxury motor trade sector, you'll find that a lot of the buyers of high-end vehicles were not native English speakers, right? So quite often one of your red flags or your red herrings that you're looking for in these emails are like misspelling or something that doesn't quite align with who you think the sender is. Well, actually, when you're dealing with high-end, non-native English-speaking purchasers, actually, you'll find quite often that the communications you get are very short, very succinct, sometimes misspelt, and which is no fault of their own. It's not their native language, right? But again, it breeds that environment where you, as the stakeholder in that business's security, you almost naturally you're pulling your guards down because you see these misspellings every day. You see these short synced replies. Send this much to this account. That's
So
it.
that the error rate of the attackers, this is like, I'm going to use technical terminology here. The error rate of the attackers has met basically the error rate of normal humanity at this point.
Correct. Well,
right?
and more so, the error rate of the attackers has begun to almost mimic the sector and the businesses they're trying to attack. So yeah, absolutely, it's on par with, but actually it's very similar to, which is more frightening than just it's good enough. It's very similar to the environment they're working within.
So
yeah, but then they're also, sorry to interrupt there, but what they're also doing, the attackers, they're dividing themselves into groups that specialize in doing certain things. So you've got one group that will just collect the data. The next group sells that data. The next group does something with that data that will then
they have
create
departments,
something else.
right?
And they have publicly listed consultancy practice.
They're like a pyramid.
They have departments, they have vendors, they have customers inside their cybercrime firms. Yes.
Marketplaces.
Exactly.
Yes.
Yeah.
So it's by doing that, they're becoming specialists in those areas. So exactly what Freddie's saying, how they've learned how to overcome those language type things, and as you said, bring it up to that level where that is mimicking exactly what's there.
And
I mean,
well, the unfortunate reality here is cybercrime has grown to the point where it's one of the largest economies in the world. It's in the realm of superpower size, and if you look at it from a vertical perspective, right, it's one of the largest verticals, and it doesn't. We weren't sure 5 years ago, like, are we going to catch this growing monster? But it seems like at this point, all we can do is stop it from crashing civilization. Like, it's still this giant monster out there we have to fight, and it doesn't seem like it's going anywhere, right? And they're getting better at their jobs, so we have to get better at our jobs. Brad, I'm curious, what are one of the gotchas you see? I want to talk about some other retail sectors, but in the motor trade here, what do you see one of these gotchas when they're going through the application process? They're going to buy insurance. What are one of the things that they don't really know how to answer the question, or they're likely to answer the question inaccurately, which is either a problem from the perspective of you're going to be denied, or maybe you'll be approved, but then you'll be unqualified for a claim, right? Where when you come in as an assessor, you're really able to set things right, both from the perspective of let's get it documented on this application correctly, but also, hey, you might need to do some things, right, in your back office.
Yeah.
What's one of those things that you've seen?
So you've opened up multiple answers to that, but it all stems from the same thing. Typically, your insurer or MGA will have a form, and it will say, do you have MFA installed? Yes, no. And the underwriter, all he wants, he or she wants, is that yes question answered, or to see the yes tick. But that opens up an entire minefield, because in the applicant's mind, if it's given to the IT guy, which typically it is, because they deem to be responsible for this, they are now in two minds, because they know that the MFA, they've got it, but it may only be 98% right, or it may be 95% right, which in most organizations is good enough, because there's other mitigating circumstances. But they are skeptical about saying yes because they know they're falling short. If they say no, immediately they excluded from 95% of insurers' insurability scorecards. So what we do is we look at that and we mitigate everything within that, and we provide through the framework approach, like a CIS framework, which goes into MFA, for example. It'll have 5 different safeguards around MFA. And we look at the question and we answer it in the way of giving a lot more information. So our articulation of the subject then gives the underwriter a huge amount of comfort, because when they look at it, they go, these guys have really thought through that problem, and they've addressed, the client now has really addressed the problem in a very satisfactory way. So it's not just yes MFA, it's MFA, but all these things have been, it's not just like a 2 MFA now, there's authenticators and all the other technical terms that you can use, but they've really paid attention to it. That helps us present the risk to the underwriter in such a complete way that the underwriter gets it, and our underwriter can immediately take confidence in the application, if I can say it that
That's
way.
a really good point, Brad. And I perhaps might be able to provide some additional insight to that. And just as this was going through my brain, I think we touched on this the last time we spoke, right? But kind of about the evolution of how underwriters have got to where they are today in their rating model. So I remember doing cyber risk 15 years ago, when in order to get a quotation for $1 million limit of liability, you'd have to complete a 20-page proposal form. So that's not so much the case anymore. There's been a lot of work done in the sector over the last however many years to reduce that application process, to withdraw the barriers of obtaining, if you will, cyber insurance. But naturally that comes with like this gray area that the insurers and the brokers kind of find themselves in. Like, if it was up to them, right, they would, to really understand the risk landscape of the client they're dealing with, they would love to ask 500 questions, right? But nobody's going to buy cyber insurance if it takes 6 weeks to complete an application form. So they have had to find a happy middle ground, if you will, where they believe, working with their actuaries, working with all of the data that realistically the market has spent hundreds of millions of dollars on over the last however many years to create this data, right? They find that sweet spot where they believe asking the least amount of questions provides them the most amount of insight, right? There isn't an insurance underwriter in the world who is ever going to turn their nose up at having access to more deeper information about a risk, a process, that will help them rate more appropriately, right? So if you're in a position as a client where you can go through the 10 or 12 questions you're being asked to complete and you can just tick yes to all the boxes, you're going to get a certain rate. If you're a client and you can tick all of the yes to the boxes, but you can also add additional information, like not only do we do MFA, but as Brad said, we do X, Y, Z, and here's why there's separation between these two networks. And you can just lay on as much additional info as possible, where you're giving the underwriter the opportunity to say, look, this is the amount of information we wanted. Now we can offer this rate, which is much less than if we just gave the yes, yes, yes. So it's
or a totally different product, right?
Potentially, yeah, absolutely,
yeah. So I the MFA is actually a whole world, because if you say no, right, clearly you're in the wrong decade if you're not doing MFA at all, right? You're not going to be insurable at all. But if you say yes, that actually doesn't give as much information as you would think, because MFA is a whole world. So yes is never like 100% I'm perfect in MFA. I'm doing the best MFA I could do, because it's a whole world. We talked about SMS tokens that are, could be subject to SIM swapping, right? There's on the other end, you've got hardware keys, right, which are super secure on MFA, and in the middle you've got push off, right? People say yes on their phone. So there's like a strength to the MFA, but then there's also different ways to implement it. So it's difficult to get to 100% MFA, because let's be clear, there are service accounts in the background doing things like backups and stuff.
Yeah.
There's a machine can't a machine talking to another machine can't do MFA, right? So there's always exceptions. And as a enterprise IT organization, if you do a really good job of auditing for those service accounts, documenting those exceptions, dealing with the risk of those service accounts in a different way, right? You've then mitigated that residual risk. But if you haven't even gone through that exercise and you're like, well, we have MFA where we can do it and where we don't do it, we're not doing anything. That there's this question mark for the insurer of, okay, it sounds like they have MFA, but clearly there's some places where they don't have it, but they're not even describing what that is, right? And then there's MFA for remote access, there's MFA for administrative access, there's MFA to like unlock. I have MFA to unlock my actual laptop, right?
Mhm.
Which is a very sophisticated thing to put in place. So there's all these different levels, and when you bring an assessor in that documents exactly what that looks like, right? You're right. That gives a lot more information to the underwriter.
Well, and as well, like the flip side of that, Matt, is that if you're an enterprise organization that's buying cyber insurance, right? There's a stage before that. First and foremost, you're taking your cyber risk seriously, right? So otherwise, you wouldn't be in a position where you're applying for cyber insurance, right? So if you're in a position where you're taking your cyber risks seriously, you'll have all of these list of things that they'll tell you to do, whether it's MFA, whether it's backing up your business critical data offline, all of these kind of stuff, right? But at the forefront of that, forget insurance for a moment. What we're trying to do is just reduce cyber risk within your organization. And where Brad and the team at Infoprotect really kind of come into their own on this stuff is you get a list of stuff you're being told to do, but who's telling these guys the best way to make it fit how your business works? Right. So more often than not, what you get is a list of stuff you're being told to do. And they go, actually, that doesn't work for our processes. That will cause too much bottleneck here and here. So we're not going to do it. Right. Yeah. But a team like Brad's or whoever it may be that they're speaking with actually says, well, look, I've seen this with other enterprises before. It may not suit here, but if you change X, Y, Z in your processes, then actually you can make it work for you and you get the additional security that comes through. So from an insurance perspective, it's a really kind of holistic view from the top of an organization, not just from the operational stuff that goes on within it. And that's really helpful from an insurance perspective.
But Freddy, you hit the nail on the head for the client, for the enterprise client. They have got all the stuff, as you say, they've got all the protection, they've got all the technologies put in place. They may have not quite done it to best practice, or they've done it the easiest way possible because they're getting pushback from their team members are going, I don't want to have this, I don't want to have that, I don't have that. With our experience in seeing it in so many different, and a lot of companies like us who have got the way of looking at it in a fresh look, we can turn around to them and say, right, you've got this in, it's giving you a little bit of a problem, but if you just tweak it in this way and just do this, you'll solve a whole lot of other issues, and it actually will elevate your security up. And on top of that, you've got some of this technology, you're using it for encryption, and you're using it for, so that data can't be taken out of your environment. But if you just ticked another little box in that technology stack without an increase in cost, you can do another whole lot of stuff. And by the way, you can tick another box on that insurance form. And if you articulate it in a certain way, you're suddenly now leaping ahead without changing anything.
And then, really. If I put my underwriter's hat on for a moment, right? If I'm acting as an underwriter, do you understand how happy I would be to see a risk presented to me that says, look, these guys couldn't really adopt some of the solutions that are being recommended on their current basis. So they have worked to change their operational workflow to incorporate these. Yeah. Like that shows so much commitment to cybersecurity and to the actual internal governance and resilience. Yeah.
Exactly. So we've gone from that stage of a client calling us in, a broker calling us in to help the client, just to get them over that first hurdle, that first cyber insurance hurdle. Then the client's gone, well, hang on, this is a good idea. Let's continue to do this. And take a proper governance, risk, and compliance program from Infoprotect, and that will help us be better off. And we'll use the savings from what we get from the insurance premium to pay for it. So it's a zero-sum game. It's not costing them anything more. and they're getting better cover, and they're getting their risk is coming down, their security posture is improving. And guess what? When it came to the next renewal, things just even improved.
It's like one of those weird situations in business that everybody strives for, right? No matter what sector you're in, what you really want is a win-win-win situation where every stakeholder feels like they have achieved what they wanted to achieve from the deal. And in this case, you're talking about businesses that get to enhance their security at a zero-sum cost. You get underwriters who get access to a risk that has not only been vetted and adheres to the conditions, but has taken them very seriously and perhaps amended their ways of working to accommodate them. You get the client that gets the coverage they want. They get the broker who, in the middle, who is recommending a business like Infoprotect, who gets the reputational benefit from it. Look, Mr. and Mrs. Client, look, we understood that you've got some hurdles you're facing at the moment. Don't worry, we as the broker have got the teams to help you overcome it. So it's a really cool situation when you can get all of the stakeholders singing from the same hymn sheet like that.
All right, I want to before we leave here, I want to talk about two more things, and we've dug into motor trade as an example, but each of these retail industries have like the way that plays out in their space, right? Most retail businesses, right? They operate at these slimmer gross margins, right? Particularly when they have physical brick and mortar stores, right? They're more sensitive to these types of losses. But I want to talk about what's it like to go through this process, Brad, right? Where do they start? Like, what's step one? What does it feel like to go through the assessment? How long does it take? What are the steps in it? What should they expect from the process? The other thing I want to talk about before we get there is just to point out, we're talking about costs. You're talking about, well, you're saving money on the insurance. You're using that to invest into improvements in strategic risk management. But I want to talk more about the costs because there's the cash cost, right? You just mentioned that, right? But there's also the enterprise risk value there. So just to draw a box around that, what I'm talking about here is if you can calculate the amount of risk you have, right? You can actually put that value on the books the same way that you can put the value of assets on the books, right? And if you worked, people think of cyber as being struck by lightning, right? But it is actually possible to do some analysis and come up with a dollar amount for your risk. It's not necessary to do that. But if we just think about that mentality, right, there's a value of the risk. There's a liability there, right? And the way you cancel that out, right, is by having insurance, right? They can come into play. And if that liability turns into reality, it can compensate the organization. That liability is either like an actual cash, like we've lost money out the door, like it leaked out of the bank, leaked out of the transaction, or it's we actually had to drop a whole team on this situation. It was a big deal to deal with this incident, right? There was a lot of maybe downtime, loss of revenue, right? The insurer can come in here. So here's the uncomfortable fact, though. There's this thing called claim denials, right? There are situations where the insurer will not pay out because they don't think that the operator of the business was doing what was expected of them. And that's usually laid out in the insurance agreement, but there's also reasonable commercial practices to consider, right? One of the most important parts of bringing an assessor in as an enterprise that's thinking about this strategic risk, right, is not only do you want to reduce that liability with insurance, you want to make sure it's actually reduced, right? That you can actually count on that claim, right? The only way to be sure that you can count on that claim is to be sure about your internal processes, right? If you're not bringing in an outside assessor to look at what you're actually doing in IT security, right, in cyber compliance, you're not really sure if when the forensics team arrives, right, whether they're going to uncover some major deficiency, right, that's going to be grounds for denial. And I it's an uncomfortable thing to talk about, but it's a reality, right? And it's really important to get these assessments in place. So I just wanted to touch on that, and that there's a real financial value to that, even if it's a little bit speculative, right? It's a real thing. It's a real liability. right?
Brent,
The
before I hand over to you, could I perhaps put some commentary on that, because this is
please.
like a hot topic at the moment, and there's I can't remember his name, but there's a guy on LinkedIn at the moment who's basically set up some sort of AI bot to post the majority of his LinkedIn posts, and he's getting some quite decent traction. To which I feel like this might be a decent platform to call it out. But he's saying something very similar in that, oh, your cyber insurance, or not similar, because I understand you're not saying this, Matt, but he's along the lines of, your cyber insurance is just a bit of paper. The claim will be denied, such and such and such. This is why you need a consultant to do X, Y, Z for you. So my retort to that is, if one of the world's largest cyber insurance providers, and absolutely probably the most innovative at the moment, is a business called CFC. Right, they've been originally started as Click for Cover. They've got a fantastic business, fantastic product suite. Their cyber claims payout rate is something like over 95%. Right, so the benefit here is, or the takeaway here is quite the opposite of what you're saying, Matt. It's that once you're on cover, okay, the chances of you receiving a payout when stuff goes wrong are extremely high. Cyber insurers, more so than any other market of insurance, have got a fantastic reputation for paying out claims and supporting businesses when an incident occurs. The bigger hurdle is getting on cover. And I think that's where Brad lets his magic work. It's because they're so ready to pay out when the worst happens, it's important that insurers do the underwriting process much more substantially than perhaps other lines where denial of claims and stuff are more prevalent. But in the cyber insurance market specifically, claim payout rates are, this is not a quote verbatim, but I would lend myself to saying that cyber payouts as a percentage of total losses are probably higher than any other class of insurance at the moment. There's no issue.
Yeah, the insurers I've spoken to is exactly that. I've had conversations this week where they're actually paying out, it's higher than 95%. And they're pooling the risks, okay. But you're right, Freddie, you have to get on cover first. And the enterprises we work with are in that category of, it's harder for them to get on. So they need the kind of services that can explain what their risks are to the underwriter correctly. The other thing that the insurers have as a completeness to the deal is they providing the incident response team. So there's some insurers and MGAs in the UK who've got massive incident response teams, and they've got an app, and all you do is, if you suspect that there's an attack of some kind, contact them via the app, and they kick their team into play, and they're using the funds from what would get paid out to pay for all those services, the PR, the legal, everything else that's needed within that. And yeah, they not only pay out, but they help you to recover. But you need to make sure you've got systems in place that they can utilize to help you recover.
And your business has got to be in an insurable position to go on cover in the first place. That's
exactly that. So just saying, well, have you got backups and is it off-site? Sure, but have you tested it?
Yeah.
How often do you test it? All those types of things, because that's what they're going to rely on. I mean, we've got a case study on our website, which is exactly around that, where there was an attack, but we ensured that their backups were in the situation that they were safe to recover. Mm-hmm. So we could turn the network off, shut down everything, put it back to zero, and fire them up again. So within 24 hours, they're up and running. But if we hadn't had all those things in place, they wouldn't have been able to do that.
So, do you want to talk about what it feels like to go through that process, right? I mean, step one is, of course, find someone that can help assess your risk, right, and help you build that case. But once you found that person, then what?
Matt, it's quite simple. In fact, we've got a 2-page questionnaire which an insurance broker uses with their clients. That it's quite simple to go through what we need to then work out whether they need us to take them through that process. So that first step is maybe 20 minutes that, as I said, the broker can handle, or we can handle it with the broker. And that consultation is free, obviously. And then from then on, we work out how much cover they're going to need, what state the actual environment is in, where they're going with this, and then we start taking. We got a very strict project plan that we go through. We utilize the Fort Mesa portal, and we've got the frameworks on there that we'll take them through that process. And it's literally days and weeks, depending on the size of the enterprise. From a £100 million turnover up to your £1 billion turnovers, as to how long that process is going to take. But it's never taken us longer than 3 weeks for the entire process. And then the broker and the client, and then ultimately the insurer receives exactly the same report, which is transparent around what the actual cyber maturity looks like, what their posture actually is. The client can use it then to improve. The broker then understands exactly what they are presenting to the insurer, and the underwriter is comfortable in what they.
So that's a really fast turnaround. So that's great. I'm curious, just like from the business owner's perspective, at what point, like let's say that they're not insured, but they want to become insured, and they think they might be in one of these high risk spaces, or they're not sure, or they have insurance, but they know that there's a renewal coming up, right? What does the timeline look like there? So step one is reach out to the assessor, right, to get this report ready so you can go shopping, right? T minus how many days there? What do you think?
In total?
Yeah, so from the time where they can get the insurance bound.
Matt, even in a huge enterprise, it hasn't taken us longer than 6 weeks.
Okay, so
and that 6 week time frame was a business that was almost uninsurable. Because they weren't aware of what their cyber risks look like. And when I say they, the client, IT department, internal, extremely competent at delivering services to their environment and to their users. This is the bad term, to their team members. And it took us 6 weeks to generate the report. The broker was comfortable, and the broker was comfortable enough to know which insurer or MGA to approach.
And then Freddie, the application and the binding process, what are we looking at there let's talk about a high risk vertical.
Yep, of course. So it's quite funny actually. This is the perfect example to highlight why a service like Brad's is worth doing. So it depends entirely upon the risk profile that we're looking at and how much information we can give the underwriter. So if you go there completely blind, just as a one-off to underwriters, again, you could be looking at a 6 to 8 week turnaround in some instances. So if there are questions that need to be asked, there's a train of communication that needs to go to the broker, to the client, to the third-party vendor, back to the client, to the broker, to the underwriter. Oh, we've got to ask you about this. We've got to ask you, can you give us some more details around your MFA? Can you give us some more details around your backups? That process, especially for enterprise clients, can be 6 to 8 weeks. If I go to an underwriter day one with all of that information laid out in a document, in a proposal, if I can highlight where each of my operations have been addressed and how we're perhaps giving some more information on our risk mitigation strategies, if I can combine that all in one doc as an insurance broker to an underwriter, I wouldn't be surprised to see a quotation turned around in 24, 48 or 72 hours.
Well, so it sounds like adding the assessment to the equation, it takes a few weeks to get through the assessment, but it doesn't actually slow down the shopping for insurance. It actually accelerates it. Even though you're going through this assessment, it takes a few weeks. So Brad, I know that you're our premier EMEA partner. What markets do you cover? When should people reach out to you? Where are they in the world? What's your focus?
Yes, our focus is on the UK and Ireland. We haven't had too much of a call from Europe yet, but there are those types of clients looking at us. And we've got global clients. So we've got, in fact, straight after this, I've got a call with a client who's got operations in North America, South America, Australia, South Africa, and the UK. And the biggest challenge they have there is where does the insurance policy need to sit? And to unravel that, yes, a broker can do it quite simply, but then it becomes, well, where's the risk? Where's the cyber risk going to be? On which location, and how does it all fit into? So the brokers that I'm working with and insurers I'm working with can bind a policy in Australia, but are taking the information from that we're giving them on a global look. The CRO sits in the UK, and obviously that's his concern, because he's saying, if I do have an incident, and he's forward thinking, where's my incident team going to sit? And for him, he wants the incident team to sit in the UK. So, as I said, predominantly that's our market. Whether it's in the south, where it's up in Scotland, it makes no difference.
So you're focused in the UK, but clearly you have these global businesses, right? And you're really looking across the Commonwealth. Is that still a popular label? Do we still use the word Commonwealth?
No, I wouldn't call it that.
Okay.
Across the British Empire.
We don't call it that.
All right, the Yank has been educated here. Well, thanks again for coming back, guys. Real quick, before we dial out here, I just want to point out, coming up on the 29th, we've got Dinesh Menon from Digi2Work, who's going to talk to us about certified penetration tests. There's a lot of focus on upping the game throughout the penetration testing market, and so certifications are really, really important. So we're going to have Dinesh in to talk about that. Until then, thanks for joining, guys. Thanks to the audience for listening. See you all again soon.
Awesome. Thank you, Matt. Thank you, Brad.
Thanks very much. Cheers. Bye.